Good. Hey, my name is Scott Redler. I'm the Chief Strategic Officer at T3Live.com. I hope you already looked at the disclosure. For compliance purposes, I got to show you the VTF so you can see my positions, which is what people see every day, all day live, when I put positions on, when I take them off, when I add to them, when I use my tier system, when I incorporate my day count rule. So here, while it's up there and you guys want to take a look, it's all right in here. And but for now, let's grab a beverage. So if you remember, we did a happy hour a week ago, and I told you I put on, I'm a man of discipline. I'm a man of routine. And I found myself with a few little extra LBs, so I said I'm not going to drink any beer. Starting last Monday, wine's good. No beer, no French fries, no chips, and no bread unless it's on a sandwich for the entire month of October because I have a few races coming up. So that's why I'm drinking wine, which I do like Chardonnay anyway. And if you remember, last time I gave you the story about my outings in the Ukraine and Tashkent and China, and we say that here's the technical analysis that unites continents. So cheers. Let's take a sip to you with your process and your routine because only you could work on it and only you are accountable to it. And I respect that. Can't be chugging wine at 4:34, but we could drink it and take it on slow. So with that said, as you can see by the virtual trading floor, which is something that updates my positions all day long, it's one of our products. There you go. I have a little bit of a mix. I have some tech names. I have some rebalance names. I have some little small caps. I have a little bit of everything. Why do I have a lot of these things on? Because what's the S&P doing? The S&P is above the 8 and 21-day moving average. Red Dog, what does Red Dog say when we're above the 8 and 21-day moving average? Are you long or are you short? Are you in a portfolio approach or you're in tactical approach? Okay, you're in portfolio approach when the market's above the 8 and 21-day, when we have an active sequence that continues to have commitment at every step of the way. So the first thing I want to go over is this most recent active sequence that we've been in. Okay, we've been in it since September 24th. Okay, we started an active bearish sequence on September 4th, which went for, what's the 4th minus 24, 21 days. 3 weeks the bears had control. They rejected price on rallies, tech didn't act well, and then finally the active bulls took the ball back, and that's when we re-entered more risk. And then every step of the way, we've taken situations and we've looked at the tape to figure out whether or not there was commitment to those points. So let's get to it. Did I say cheers? Cheers. It's October 8th, man. It's been a long bunch of months. I've been sitting here in the Short Hills office by myself since February. I do these 6:30 a.m. videos to try and give you guys the theme of the market, throw a few fish in your boat because I'm here to help. I've been doing this 22 plus years. I have experience, and some of you guys got laid off and needed to trade to pay your rent, to pay your bills. Some of you guys were traders back in the day, and then you came back to it. You're like, I need to fine tune my skills. Why not, revisit Red Dog and T3? And some of us have been trading through the whole thing, and you've been able to take advantage of the volatility, and you're having your best year you've had in years. I've made quadruple this year of my past average on the last decade, but shh, keep that quiet. We don't want to talk about that out in the street because there's a lot of pain out there. So if you could pay it forward and you can give it to charity, that's what you do. Okay, but you're having a great year because you've been working at it and you've been evolving your process and you're getting up early and you're putting in the time with much respect. So now let's do a little technical lesson on the last active sequence that we just saw. But first, little tunes for a second. Anybody remember this? I'll tell you, 80s music back in the day, if some of you were born after that, you got to go revisit it. And if you have a Peloton, make sure to use Kendall Toole, Ali Love, Emma Lovewell, and my boy Alex Toussaint because they play these 80s rides, which gets the sweat out and helps me with my balance and helps me to feed the brain on the weekend. So let's go. Here we are. Let's get this out of the way. Here we are. Okay, there is the S&P. The S&P is my daily blueprint of what is happening in the market. So this way, I could then look at the Qs, which is tech. I could look at the leaders, usually high beta tech. I could look at the rebalance sectors, which is the small caps, the airlines, the energy sector, the banks, and I could put together my plan depending on how the market feels. What's the flavor? What is the flavor? How are we feeling? So for me, I have these active sequences which I try and be in a certain mode. Am I in like doot doot doot? You know, go nuts, play breakouts, add on strength, you know, and just hold a bunch of positions that are working out well, high five everybody, have cheers. Or there are times when, you know, the market's not feeling well. We're below the 821 day. They're selling rallies. You could press prior lows. You know, things feel faulty, and then you're in less positions, which is fine too. You're more tactical, and you're taking, you know, advantage of ranges and big movements, and you're just, you know, testing areas versus sitting in things. As an active trader that trades for a living, you don't sit in things when the momentum's not there and the market's faulty. So let's get really quickly just to the last two active sequences, because all I have is a half an hour today. You know why? Because my son Chase is basketball practice, and then I got to be home for dinner. We have people coming over, but I want to make sure to have happy hour with my community out there. To my traders around the world, which uses technical analysis to unite continents. And I hope you use a dash of common sense, because common sense is what wins overall. Control what you can control. You can't rant about what you can't control, and you can't be pissed off about everything in the world. You know what you could do? You can control your keyboard so you could trade for a living. You can control how you handle yourself with your parents, your kids, your spouse, and your friends. And if you do all that in a way that's responsible, and I remember my grandma said, she's like, if you conduct yourself in a way that you want others to conduct themselves, the world will be a better place. So anyway, here you go. So this was the high of the S&P, 3588. Okay, right here was the first potent engulfing bar that wound up giving the active bulls, you know, a shot across the bow to reduce positions. Here is where the active sequence started on June 29th and went all the way to the high of September 2nd, before the September 4th, you know, which came out of nowhere, wide range bar. So this active sequence was what? June 20th, July 20th, or it was almost 10 weeks long of buying dips, managing the tier system, looking for the leaders, and it went all the way up. Why? Because we were above the 21 day this entire time. Look at the 8 day. 21 day, actually the 21 day is off here right now for some reason, so the 50 day was all the way down there. So even the 8 day, all the way up until finally it broke. Then the bears had control all the way down to the red dog reversal right here that went below 32.29 and reclaimed it. So that was when the active bull said, guys, we're taking the ball back. Cheers to the active bulls. L'chaim, skol, salute. What are some other, let's see, I want to see everyone, if anyone's hanging out on the virtual trading floor. What are some other ways to toast? What are some other words? We're going to toast here. I have friends from around the world. I said l'chaim, which is, you know, Jewish toast. Salute is, I think that's Spanish. We have, all right, we have kampe. I don't want to, that's in German. We have, what's it in the Ukrainian language? I've said salute. I can't say that one, Tomak. It's so, okay. What else we have? Saudi. Okay. What else we got? Put it on the chuck the kampai. Okay, that's Japanese. So to all my friends around the world, however you say salute or l'chaim or cheers, cheers to all of you for tuning in and taking the time out to learn a little bit and just hang out, because it's been a tough week. We've had vice president elections. We've had the, you know, excessive testing positive cases. Think about last Friday. Last Friday, I remember being here after doing a happy hour where I had 20 plus positions. I was a little tipsy. Came home, my wife's like, are you okay? I'm like, yeah, I'm a little tired. I'm like, let me go just go sweat it out in the sauna and let me not talk too much and incriminate myself. So I went downstairs and I sweated it out in the sauna, which I just got, and I posted a picture today. I love my sauna. And then I walk in on Friday to, you know, the 1 o'clock, whatever it was, of the president saying he tested, you know, positive for COVID, and the first lady, the future's down 50 points. So what did we do? Did we sweat? Did we say, oh my God, what are we going to do? We said, no, we're going to put together an active plan. We're going to look at levels. We're going to figure out, can we buy versus the lows, buy versus an area, trade out of positions, and get a little bit more comfortable. And you know what? That happened on this day. So let's just fast forward to where we did the red dog reversal, where we broke the descending channel, where we peaked. And on this day, this was Friday. This is when it felt like the world could have collapsed with the president getting COVID. And what did we do? We held 33.23. Is that a strong market or a weak market? That's a strong market, right? We didn't even fill the gap. We didn't even fill the gap from the red dog reversal low, the power when it took out the prior high, the gap up, digestion, and then we tested it and held. So right there, that could have told you on that Friday, hey, you better not be too short over the weekend. You better have some positions on, which we held, which the virtual trading floor and Brother All Access gets to see. And all of a sudden on Monday, you gapped up. On Tuesday, you pushed above, so at least you had an area to reduce some risk. When I say on Twitter, guys, remember sell rules. What's a sell rule? For me, when you gap up, you sell some strength to book some profits, make some money, feel good. So this way, if you pull back a little bit, you could buy some back. Or if you pull back a little bit, it turns into a bigger pull-in, you wind up making some money on what you sold, and then you salvage on the rest, and then you get flexible to see what's next. So this day, all of a sudden, looked like an outside day. It looked like the bears had a chance to change direction, but what did it do? All it did from here, pull back to the 8-day, which was powerful. Listen, I went from like 23 positions to 13 positions, and I was like, you know what? Who knows what this day is going to lead to? I don't buy day one down, because day one down is typically a direction change that can lead to day 2, day 3, day 4. So what did I do? I reduced some risk, and thank goodness I didn't increase my hedges where I'm like, oh my God, now we're going to fall apart. Because if you reduced longs on Tuesday and got super duper 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 duper, did I say duper duper? Did I say duper 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 short here? The next day we opened up 30 points. You're like, oh my God, I lost money short. I mean long, and I'm now trapped short, and I'm losing both ways. And then you're spinning around like a little top. So for me, I tend to like to be long. I tend to like to be in a portfolio approach. So when risk happens, I reduce positions, and I need to see a lot before all of a sudden I get really flat, and then all of a sudden I start leaning really, really short like we did back in February, which I'm not going to get into that. So anyway, the next day we gapped up above this 33.84, showed that this meant nothing. You had to cover shorts, you had to put on positions fast, which is what I tried to do. Tech held in there, and then today was your follow-through. Went as high at 34.47. What did we do? We took out this resistance here. On this active sequence, the bears rejected price. Look at this red dog reversal. So look at this one right here. Okay, this wasn't even a major one, and it led to a move down another 100 handles or so. So that's why in this one, you were okay to reduce some risk. It happens. And then there we go back to 34.47. So now today, we closed pretty strong. The banks were stronger. Some of the cruise lines were a little stronger. The airlines were stronger. The energy was stronger. Tech didn't fall apart, but didn't show power. It wasn't the easiest day. So cheers if you had not the best day and everyone is looking at the market and saying, oh, I crushed it. Because not a lot of people crush it out there. Usually they're lying. If they say they crushed it, they probably, I don't even know. They're not really telling them like it is. Because if traders crushing the market, nobody wants the trader gods to hear. If I have a fantastic day, I'm not like, I had a fantastic day, because I don't want the trading gods to say, hey, you're getting a little bit ahead of yourself, buddy. I got to give you a slap across the face. Us traders were very superstitious. And if you've made a lot of money, most traders that make a lot of money don't talk about it because they don't want people asking them for money. It's the traders that are trying to be accepted and trying to fake it till you make it. Those are the ones that are loud, loud, loud. And the other ones that are loud are the ones that are wrong. You ever see people on TV, they have an opinion and an idea, and all of a sudden it goes against them. They don't stop themselves out. They just get louder and louder, and that's why I get pissed off at them, because they're the ones who blow up active traders, because they don't give you a way out of a bad idea that turns into a disaster, or a pain trade. They get louder until they're right. And for me, I'd rather say, hey, if this happens, then do that. If that happens, then do this. And if I'm wrong, I'm wrong. I'll revisit it. So cheers to revisiting trades where you're not there at the exact time. And that happened today, which I'm going to get into right now. So two of my best winners of this year were NEO and Tesla. Okay, both I came in pretty long today. And I was thinking, hey, maybe NEO breaks out today. Why not? It's been strong. You got a bull flag. I'm a little skeptical always when you have base on base moves that could fail. If you look at NEO, all in all, it's had a really fantastic move. We started buying it here. Look at that, above the 8-day. What a quinky dink. Okay, had to move straight to 16, pulled in, consolidated, back above the 8-day, started buying, added a ton, had $15 calls, made 400-500%, went again to 2097. Wound up giving us another really, really, really nice trade. Okay, here where it wound up taking out 1920, taking out 1988. All of a sudden closed above 2097, gave you a move to 2259 to sell from here to here. Why not sell? It's extended. And today it looked like it could go. And people are like, Red Dog, why isn't Neo going? I'm like, maybe today's not the day. Sometimes it's not the day. So in my swing account, I didn't lose much money in it, but in my day account, because I have an active account, I have a swing account, I have an option account, and I have a box account. And those are my professional accounts. And I have a 401k, I have a 403b, I have a 529. My wife has a cash account. So I have all these accounts. So knowing your time frame is huge also. Cheers to knowing your time frame, because it's different for everyone and your risk is different depending on where you live and how you live your life. Anyway, so it did look like as of yesterday, we were kind of right there. What the hell is this doing now? What is that thing? So all in all, it looked as if we were ready to take this out and have another day. Wouldn't that have been fun? It didn't happen. So anyway, it got back up towards 2259 and rejected price. So now we'll see, does it rebuild? Does it hold and go sideways? And next time it revisits this area, don't say, hey, I bought it on Thursday. It didn't work, because maybe next Tuesday it takes out 2259 and goes. But if you look at momentum rules, if just say you were long 1,000 shares versus 2060 and you added another 1,000 shares above 2180 to have breakout, and then you were saying I'm going to add another 1,000 shares above 2260 because it's in motion, it doesn't happen, you have to reduce your momentum shares because momentum didn't come. So now it needs to hang out in here. So you don't want to be jumping out of your skin when you're hanging out in the tier size when it's in the base versus when it's in motion, when it's going, and that's when you have your tier 2 or your tier 3 to make money. So for this, not the end of the world. I would hope that this holds, rebuilds, and goes again. Not a big deal, okay? But using a tier system works. Tesla, I bought yesterday again. I trimmed a little bit up 10 today. Some people are like, what's wrong with Tesla? I'm like, it's just there's no FOMO right now in tech. Money's going in other sectors. It has some. You have to give it some time. You can't be really upset with the action in Tesla, except for it's just not ready to break out and be prime time and get back up towards 502. If you remember here, this was fantastic, by the way. Remember, you pulled in from 462. Came into the 50-day. I did a whole lesson on buying at the 50-day, adding when it reclaimed the low. We had to move up to here, which was resistance at the time, sell some, bought some. And I'm being honest, this is everything that I did. I sold some, and then I've been kind of out of Tesla since, because they were going to have the, battery day, and I never take stock into binary events. Listen, into earnings, you never take stock, long or short. You're guessing, you have no clue what's going to happen, and if you're wrong, you could blow up your trading account. You take options, not naked options. You take a call spread, a put spread, or calls or puts, and play it that way if you have FOMO of missing out. So on binary events like the battery day or an earnings or an FDA approval or all those things, you do not just throw shit against the wall, and because you can blow up your trading account. So let's do a cheers to not throwing shit against the wall and blowing up your trading account, because then we won't be here in a few weeks from now and I'll miss you. But that's part of my system, my process. But anyway, so here, it came up into resistance. I guess now you could draw this line a little lower, which is good. It's, it's creating this little descending channel here. You could draw your line however you want it. Today's high was what? 439. Look at that, right into resistance. And it closed pretty weak. So would I be, large into Tesla that had a strong day in the market and closed weak? No. I'm strong Tesla when it closes strong in a weaker tape, when it shows relative strength. But do I still have a little bit on because I bought it here and I sold most? Yes, because who knows? Maybe tomorrow we get a little gap down and it reclaims it and it goes sideways, and at some point it takes out this ascending channel and we add another tier. Apple also. Apple, hasn't been spectacular. What are you going to do? Apple was a fantastic trade. Remember, I had my little interview with Chase, and He bought Apple on this day, and he's not a trader. He just bought it on this day. Big percentage off the highs. He just opened up his account. I put in $1,000. He put in $1,000, and I'm trying to teach him how to trade the markets. He's 12, and I just want him to look at the tape. I want him to look at news. I want him to get to know names, and I got to teach him, right? It's like if I was a basketball star or a football star or whatever I am, I'd be teaching him how to be a quarterback or whatever. Anyway, it's just good for everyone to know. Teach your kids about, you don't have to fund an account for them, but teach them about the stock market. Unfortunately, I feel like the schools don't do it. I feel like the colleges could do it better. I remember back in the day, I had like the stock market challenge, and I don't even know if they have that anymore. So I would say, hey, if you could fund their account, through Robinhood or I'm a small partner in public.com. Public.com is like a Robinhood. I'm not here to promote it, but I'm just telling you it's another type of no commission slices trade, which everyone's been copying, but we won't get into that. Cheers to the friggin' copycats. I can't believe you're getting away with it. But anyway, teach your kids. Start them somewhere. I showed a picture of me and Chase with this little basketball thing where he was putting it in when he was like 6 months old, and now he's playing AU basketball with every kid wants to be D1. Lacrosse, we're 44-0. So don't just teach your kids about sports. Teach them about finance and make sure they're studying. Make sure they have a nice surroundings at home. Make sure you talk to them because they're on, actually they're more on, I would say, Instagram, and a lot of them are using TikTok, and they see the headlines the same we do. So when the president got COVID or all these things were happening, your kids are seeing it, and they can be scared. So talk to your kids about what's happening. You don't want them to be in their own head, but that's different. So anyway, Apple, is it the end of the world that it got rejected or resistance? No. It's just choppy. Here you had your low. Here you had a higher low, which was great. That means it was showing relative strength when the SPYs made new lows. Here it's when it took out the trend line. That's your buy. Here was your follow through to sell. Here's resistance now, and now it's just going sideways. Just don't overtrade it. When something's basing, something's building, you try not to overly trade it. So for me, I'm in small. Where would I be? If I'm an active trader, this should be your out. $12. $112. If you're an investor, chances are you're going to be right and make money at some point. This is more about active trading and swing trading and trading for a living. If you're an investor, in time, you buy Apple 15 to 20% off highs. Typically, you're going to win. I have my iPhone right here, just playing music. Let's hear what it's playing right now. All right, it's Van Halen, but not like my Van Halen. Let's see, I'm going to... Oh, you guys remember this one? Hold on. Got to remember this one. Ready? Think about what I'm going to play from Van Halen. God bless his soul. Cancer sucks, by the way. I have so many friends die of cancer. Remember this one? What's coming? What's coming? Anybody know in the VTF? Nobody? All right, I'm going to get them over here. Let's see. Everyone's talking about what's happening. Lemonade. You guys want me to talk about lemonade? What's happening? Hafatisha. There you go. I remember this. I was in high school when this came out. Maybe even middle school. I'm dating myself. I'm 47 years old. 65 years old. Live life. You get a long time. Don't sweat the small stuff. Exactly. That's what we're going to listen to. So anyway, Apple, it is what it is. Not that bad. But you know what? You look at a bull flag type pattern that's different. I bought Goldman Sachs. Goldman Sachs, look at this pattern. Okay, here's your 8 and 21 day. I was buying it on this day I didn't buy the low. This is when everyone was talking about stimulus. This is when everyone was talking about the rotational trade. I bought it here, and here we are. Closed hit as high as 208 today. There's a big void up until 212 or so. Nice little wedge pattern. Closed on the highs. So what do? I take a little bit more home. Why not, right? So 206. This was your pivot to buy. It went as high as what? 208? That's a move for Goldman Sachs. I haven't been in Goldman Sachs in months. But as a trader, you could find patterns that have high probabilities of working out, and you go with it. And this one, not so bad so far. I don't know what it's going to do tomorrow, but I'm long it overnight. You can see it on my disclosures. It's not extended, just got above, and it can continue. Why not? Another big wedge pattern that I was talking about in the wellness sector was this new issue that came public that had a great, a great pattern. What it was, I don't even, sometimes I don't remember the symbols, like GRWG. Look at this. I miss this, by the way. I miss this move. It's okay. I'm not upset about it. It happens. Let's get my little trusty line here. Went as high as 22, consolidated. I bought it here. And all of a sudden, look, it hit as high as 18. I think I was in it around 15 and change. Added here, trim some. If you trim some into strength, you don't care if it pulls back a little bit. Then you had a nice move today. I sold some, so I didn't care buying some back. And now above 1835, that opens the door to 22. So one thing people ask me is like, okay, why do you talk about pivots? And why do you say get above and stay above? Why is that important? I'm like, okay, well, let me ask you a question. Here's 22, right? 22 is what? That is the all-time high. The all-time high of this stock. So in order to get back to 22, I'm not coming up with a number. What does it have to get above and stay above to get momentum? So if you think, hey, I just played it from 15 to 1832. In order to get to 20 or 22, it's got to get above what? 1835. That's why it's important. Gets above 1835. If you're short, you have to cover. If you're looking for momentum to get back to 22, that's when you have to get in. That's why these pivots are important. Pivots are important because they're just active battlegrounds for you to figure out who's going to win right there, the Bulls or the Bears. What happens all day long. So, BIGC is another, not the best. It's very choppy. Not the best, example. But I remember when 90 was a pivot. People like, hey, this is going to get back towards 111 or 104. I'm like, well, what it's going to have to do? It's going to have to get above. This is 89.79. This is 89.80. So it's going to have to get above 90. So I bought it on this day. I added on this day. I added here. Didn't go anywhere. I stayed with it. And then when it got above 90, in order to get to 104, it's got to get above 90. So you're buying it through 90. So anyone who thought this was going to go back to the lows of 66 or wherever it was, they had a cover, and that gave you your push. And that's why you identify the battleground areas between the longs and the shorts. So this way, you figure out who's going to win it for that second, that 5 minutes, that 15 minutes, sometimes that day, and sometimes the next few days. Look at Beyond. Beyond, I sold it early. I screwed it up. Okay, my goodness gracious. Some guys are like, hey, right here, like this stock is going to go to 190. Look at the accumulation here. Look at the accumulation of Beyond. Look when it got, 165 is the prior pivot. So let's cheers to 165 because a lot of people made a lot of money on this. And let's cheers to you for tuning in to work on your tactics, your education, hanging out with Red Dog. Because, we all try and learn and evolve and make money. And if you can do that, again, no one's taking this career away from you. If you have a routine that you love, you're going to do it every day, and you're going to execute with confidence. So anyway, 165. In order to get to 190, what do you have to get above, which it hasn't been above, is 165. That is why that level is important. Because anyone playing against it to get above 165, it's above 165. It can go to 170, 180, 190, 200. They have to cover. And if you're thinking, hey, it's been in this range between 160 and 144, it's ready to go, a measured move of 20 points. Once it gets above 165 and holds it, the shorts have to cover. The longs think it's going higher, and there you have. And then PS, it got above 165 here, held above 165, and just hit a high of 197. So that's why prior pivot areas are very important, because that's where the fight is fought. You need to know where the battleground is in order to know whether you add tiers or you don't, whether it could continue or it doesn't, or whether there's momentum or it fails. And here, it got above, hit like 170, retested this 165, and PS went as high as 197. Unfortunately, I think I sold it at 175. I made 10, 15 points. Didn't hold it for the whole thing. I'm not perfect. I don't claim to be. I am far from it. I went to SUNY Albany, for God's sakes. which I went to SUNY Albany, so this way I could pay my way through college. And I went home on weekends to dance and be an MC at bar mitzvahs and weddings. And I did that twice a month while I was president of Sigma Nu. True. Sigma Nu, true. So you can hustle. I'm a hustler. I'm the guy that wants, I want the ball in my hand and I want to run it. But I also need a fullback to help. I need a friggin' offensive line. I need a team. And I also want to be the offensive coordinator for you guys. And sometimes everyone's like, Red Dog, why aren't you in this play? I'm in it. I'm making money. Why aren't you in that one? Because I write a note with 25 different if, then that plays, which is right here. So here, people are like, what's Redler All Access? Let me put that up there for a second. Here it is. T3live.com/RAA. That is my service. That is literally where I live. I write a note every day. I start looking at the overnight futures. I look, actually, no, that's not what I do when I wake up. I wake up, first thing I do is I take a shower, thank goodness, so I don't stink. I don't have my phone by my bed. By the way, you shouldn't have the phone by your bed because at night, if you're in positions, you're going to look at your phone, you're going to sleep restlessly, you're going to wind up becoming a fraction of yourself because you're too friggin' strung out. Keep your phone downstairs or in another room. So this way, you don't check out it at night when you're trying to sleep. You do not do that. You leave it in another room. So then when you wake up in the morning, you take your shower. I take my shower. I come downstairs. I put in my coffee. I pet Cadence. I give her a treat or two. I let her out. Then all of a sudden, I drink 16-ounce glass of water with a multivitamin. And by the time my coffee's ready, I drink my coffee. I let Cadence in. I give her another treat. Sometimes she's a little, a little Galvon where she wants a few more treats. And then I turn my phone on. So it's been 40 minutes since I woke up to let my brain get back in action. And the first thing I do is I look at overseas markets to see what Europe's doing, see what's Asia doing, so I see how they respond to our action the day before. And then I think in my head, where are the futures going to be? So I figure out if there's something different that is out of whack, and usually it's not. And then I have services that give me what happened everywhere around the world, and then I aggregate them, and then I look at my charts, and I come up with my morning note, and then I update 20 different names, usually the fastest acting names out there. I start posting charts. I come in at 6 o'clock. I'm sitting here. I'm not drinking wine. I'm usually drinking a nice coffee and getting my day going. I start talking about where things are at, what I'm looking for, what, if we're having follow through, if we're having misdirection, what is the damn market doing? What is the market doing? Not as what are the people saying out there, not what are the analysts saying, not what are the networks saying, not what's the president saying, not what everyone's saying. It's what is the market saying? You know what? The market, every single person out there at S&P 2850 was saying this market is not going higher. Let's get into that real quickly for a second. All right, because I'm a little pissed off. I'm pissed off the way the professionals, conduct themselves. If you look here at the S&P cash, yes, you go back here at the low. Right here is at when everyone in the world said the market can't go higher. And at that point I said, you know what? Let's take a breath. From 2100 or 2191 to 2850, yes, this is a nice area, probably where there was some resistance where we would go sideways. So right here we went sideways, we consolidated the move off the lows. You look right here, and then nobody came back out and said, hey, I'm wrong. We're not going to go back and test the lows. We're not going to go back. Right here, you had a red dog reversal, which is what I went over in Redler All Access in the virtual trading floor. That was a spot where the bears lost control. You had a gap up. You didn't fill that gap, and that started another active sequence. On TV, everybody was talking about why is the market going up? Main Street's disconnected from Wall Street. Wall Street's disconnected from real life. Blah, 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 blah. As a trader, though, you have to disconnect yourself from the headlines, from the media, and connect yourself to the action. What is happening? Where are the moving averages? Are we above the 821 day or are we below it? Right here, we gapped up and we stayed above it from 29.58 to 32.33. That is almost 300 handles of an active sequence where you could have made a lot of money if you had the TV off, if you had the networks not talking in your ear, if you didn't have the professional pros that play professional pros on TV that try and tell you how to trade your money, and chances are they don't even have a friggin' dollar in the game. Right here is when the market said we're back in vogue, okay? After sideways consolidation, after a move off the lows. And then from there, came back in, little corrective phase again, another red dog reversal into 3,004. That was when the summer was going on. That was right before Apple announced their split, Google announced their split. People in our community had their best July and August ever because we knew what it meant when they announced it. And then you had another move all the way up towards the peak here of 35.88 above the 8 day, above the 21 day, getting rid of the noise. So that's why I come in every morning with the 6:30 Club, with RA, with Red, everyone. Cheers to if you listen in the morning and you turn the TV off and you listen to the charts and you listen to the technicals and you listen to the leaders and you listen to what's happening in the tape and you trade what's in front of you versus what you want. And it's been very hard. Social media, the networks, doomsday is always here. Doomsday is always happening because sensationalism is what sells articles. Sensationalism is what gets people to click on things so people could sell advertising. If it's not sexy, it's not selling. So I hate to say I'm not really sexy. I'm getting a little old. I got my forehead up here. I'm in the middle. I don't like the far left. I don't like the far right. I like common sense in the middle. So PS, you had another move up to 35.88 before this day happened. This day happened. That was your day when, okay, now maybe, we're going to have a corrective phase. And PS, we pulled in. Here was your red dog reversal. And then this is where we are right now. So anyway, the market will always speak to you if you're willing to listen. The market will tell you what you should be doing. Hopefully your seat time, I'm in this seat for 22 years, and I'm here to explain things that I've learned and things that have developed and hopefully speed up your curve. I'm here to speed up your curve. I'm here to, the Cliff Notes? Listen, I used to read textbooks, and I know I wasn't the smartest guy. I'd have to read a textbook. I'd have to write a few sentences down, read another chapter, write a few sentences down, read another chapter. And then literally after I read all the chapters, my ADHD would kick in. I'd have to read all my notes. And then I'd take a practice test and then look at my notes. And I would have to absorb things so damn slowly, but I would look at it 3 different ways. And then I knew everything I was absorbing and reading and looking at. So I don't know the tangent I was just going on that, but basically saying, you got to read the tape. And you got to look at it different ways. That's why I write a note. That's why I put up charts. That's why I do videos, because all 3 ways people ingest the information differently. And you're not going to get rich by listening to me. You're going to do well by learning why I'm doing it. So this way you could execute with confidence when you see kind of the similar setup. And I'm not saying I'm always right, but I'm not going to get louder when I'm wrong. I'm going to just stop myself out and figure out what's next. Because who knows what's next? Nobody knows what's next, but there are high probabilities of situations that usually play to the market strengths. So yesterday I was sitting at the table with Chase, and he was saying to me, the other day I was a little stressed out. It was probably this day, right here, a little bit like this day when we had the reversal. Because I taught Chase how to play Texas Hold'em. I'm going to leave on this story. The kid's at 12 now, and I hate, putting gambling on the same page as trading because it's the furthest thing from. You can't go to a casino and get dealt a hand in blackjack and say, I don't want to play that hand. I don't like my 6 versus your 10. I don't like my 5 versus your ace. You could do that in black. You could do that in trading. You could say, this isn't a great setup. I'm gonna pull off. I'm gonna pull my hand off. Or when you get a 10 versus 6, now I'm gonna put a lot of money on the table, because we do that in trading. There are high probability trades where you could add a few tiers, and from past history that's going to work out, and we've seen it work out time and time again. That's what traders do. We look at past patterns that repeat themselves, and we dissect them, and we go over them, and we figure out when they happen again. It's all greed, fear, emotion, complacency, and it gets put together. So anyway, I told him how to play Texas Hold'em. I'm like, let me ask you a question. So we're getting a little misdirection in the market because the last few days have been misdirection besides today, yesterday into today, which still wasn't easy. I'm like, so what did I teach you? I'm like, what happens if you get a pair of kings in Texas Hold'em? He smiles. I'm like, that's a good hand, right? Are you gonna go in with your 6 friends? He's like, yeah. So I'm like, what if it's a big blind? He's like, I'm going in with a pair of kings. I'm like, okay, so all of a sudden you go in, you put your thing up, you don't bet because you don't want to bet yet, you don't want to tell people what's happening. Then the flop happens. A king, an ace, and a 4. You're like, I got 3 kings. Like, Chase, don't let people know what you have, chill out, and all of a sudden, the guy to your left, he bets 100 out of whatever it is he has. The guy next to him folds, the guy next to him folds, the guy there says, I'll see 100, and then Chase is like, oh, I got 3 kings underneath there. Does Yeah, I'll see that and I'll raise you 100. Keeps this guy in, that guy goes out. And then all of a sudden, another card gets turned over and it's say a 4. So now he's not really worried. He's like, oh, I got 3 kings here. There's an ace, da da da. And then the guy, you know, puts up 300. Chase is like, I'll put up 300 and another 200. And he's got 500. And then the next card, turns over. It's like a nothing. And then they're like, all right, they bet again. And they turn over. And then all of a sudden, Chase has got 3 kings. The guy's got pocket aces. And, all of Chase's money put on where he thought he had a great hand. It was a broken hand. Broken hands happen in the market. That means like things close on their highs and the next day they gap down and you got to figure out how to get out of the way. That kind of happened a week ago, last Thursday that kind of happened here, where it's like, okay, things kind of closed okay. And then all of a sudden the next day gap down 500 points, wound up not being a broken hand because we traded out of it, but broken hands happen. Same way in blackjack, you have an 11 versus 6. You're like, ooh, what do you do on 11 versus 6 in blackjack? You double down, right? You double down. Like, 11 versus 6, you double down. But what happens when you do the right trade, you get a 5, and you're like, oh, doesn't that suck? And then the dealer, you're like, okay, I hope he busts. And then he turns over a 4, then gets a 10, and then takes your money. Like, oh, I had the right hand, I did the right play, and they'll make money. But that doesn't happen that often. So if you do the right trade with the right probabilities on your side, whether it's the moving averages, whether it's the trend, whether it's the group is acting well, whether dips are bought, whether breakouts are happening versus having distribution, you're going to make money over time. So if you develop your process around the right trades, and if you let the right trades work out versus counting the money, you're going to be able to make more and more money as your career develops. And I've been doing this for 22 years. I made the same money. I'm being 100% frank. I'm the chief strategic officer. I've been on TV everywhere, Fox Business, CNBC, Bloomberg, this, that. I've made pretty much the same money for the last 12 years, which is good money. I live in Short Hills. I have the office. I I write a note. I do the charts. I do everything. And then this year, I literally quadrupled what I made for the last 12, 13 years on average. Maybe it's because of experience, maybe because there's more volatility, maybe because I'm sitting here by myself and I'm trying to like really lead by example. I don't know. Maybe my mind is mentally stronger than it's been. All the things that it takes. So it takes a long time to get to where you want to be, but it's a process. And as long as you take steps in the right direction, you'll always be evolving your process and moving forward. And if you keep moving forward your process, you'll make more money over time. But if you do it too fast, just like a chart, you got to come back and test the moving averages. If you do it slow and steady and then you base, you'll go again. And at this point, 2020 has been a crazy year. I can't even explain what's been happening. It's 5:15. I got to be home by 5:35 for dinner. Otherwise, I got to take Chase to basketball. And maybe my wife should drive. Don't tell her that. What happens in the recap and what happens at happy hour stays in happy hour. Cheers to that. My friends' sons are watching, the recap and the happy hour, and I'm going to their house and like, oh, I had my schnapps with you. I'm like, shh. Seems like, what do you do? You drinking at your recap? I'm like, no. Just on Thursdays. But anyway, my point is, it takes time, it takes work, it takes effort like everything else. And with time, work, effort, and experience, you will hold things longer, you will add more size, you will create a bigger tool chest, or tool belt, whatever you want to be. If you want to be Wonder Woman, she's pretty strong and cool and hot. If you want to be Superman, he's pretty strong and fuerte and, whatever. I just try and be the red dog. I just try and, be who you are. Work on your strengths, build, try and work on your weakness, build on your strengths and work on your weaknesses. That's what you do. I always say I'm a bad short. Everyone's like, red dog, you're not really a bad short. You just don't do it all the time. So when you do it, you're usually right. I'm like, that's true. My strengths are really being when the market's strong and conducive to breakouts. I'm doing that as much as I can. When it's not, I'm just trying to stay out of the way. Because I know if I'm short and I'm pressing things and it go against me, I'm going to be pissed off and it's going to make me, just be aggravated. And you can't be aggravated as a trader. You have to be even keel. You have to have a nice mantra and you have to be ready to, make decisions fast. So if you're out of your skin and you're a little frazzled, you're never going to make progress. So, but with that said, you can work on all those things, but they take time. So if you're a new trader that's been trading for 6 months to a year, don't expect to make 6 figures plus, but you can, but don't expect it. If you've been trading for 5 years plus and you had a great year, you know what? Don't increase your nut because all of a sudden the next year or two might be a little bit more difficult than this year, and you don't want to increase your nut because if all of a sudden you make your expenses higher and then you have a year or two that's not as good, all of a sudden you start getting a little stressed, you start forcing trades, and then you get behind the 8 ball, and then you become frazzled, and then you know what a good trade is anymore. So there's all different ways to approach your own career in trading, and it's different for everyone, and what works for someone doesn't work for someone else. And you'll figure that out as time goes by. The more seat time you have, the more your inner voice will be created. The more you write down in the journal, the more mistakes you make, the more you learn from them if you acknowledge them. Acknowledge your mistakes. Because once you acknowledge your mistakes, you can learn from them instead of having denial from them. It happens every day. That's how you create your trader inner voice. So with that being said, I got to get going. I'm going to play one more song in tribute to Eddie Van Halen, because you know what? 65 years old is way too young to pass away. My best friend passed away of leukemia when he was 30, and I'm 47. My dad's 74. Like, just kiss your kids before you go to sleep, and call your parents if you can, and just make sure you have no regrets because you're moving too fast and you're not spending time with the ones you love, because that's what it's really about. So let's do you really got me. Hold on. Here it comes. All right. Listen, thanks for tuning in. Gratitude. I appreciate you tuning in at 6:30 in the morning to get the theme of the day and maybe a great play if there's a great setup. I have gratitude for Redler All Access that are subscribers of mine that have been here for 5, 10, 15, 20 years. For the virtual trading floor that hangs out all day long. We're all in this together. I post videos on the weekend about, a negative mind will never get you a positive life. That's the truth. If you can, you pull someone up. You don't cut the cord. What does that mean? You teach somebody about your success. You don't rant and rave and show it off. Make other people as successful as you are, because there's a video from that I promoted also, Why We Fall. It says, if you're not making someone else's life better, you're wasting your time. And if you lie to yourself, who sees it? I tell Chase all the time, I'm like, listen, if you lie to me, you might get away with something, but the gods are going to know. The gods are going to know, and sometime you're going to face the piper and you're going to pay the piper. So be a good guy, take care of the family around you. And if you do that and you conduct yourself in a way that others, or the way you want others to conduct themselves in grassroots fashion, the world will be a better place. Thanks for tuning in. I'll see you at the Red Dog Happy Hour next Thursday. And gratitude.